All right. So, welcome back. Podcast number, I don't know what, 10 or something?
Number 8, 9?
8, 9. I'm DMoney here with Barnes Anderson, and we are today talking Cardano, I think.
What's up, guys? Yeah, we talked about Ethereum the last 2 weeks, so I figure we go into some of the other major Layer 1 projects. And Cardano, want to talk about it because, for one thing, Charles Hoskinson, who's the founder of Cardano, was one of the co-founders of Ethereum. So, pretty important guy. Also, a couple of cool things about Cardano. It's the only peer-reviewed blockchain that exists. So they have several peer-reviewed articles. You can go on their website. I think it's cardano.io and research that. Also, don't have a white paper, but everything they do is very scientific. And while they have been slow to develop, I think once they really get things rolling, they're really going to take over this. I'd say take over, but definitely take some of the market share away from Ethereum because they aim to be more scalable, cheaper, and just a little bit easier to develop on their platform. And we'll go through the reasons for that here shortly.
So, we talked about this before, but you think they have a real shot at being number 3, right?
Well, right now they're top 5, and I think right now they have around 1,000 dApps on their ecosystem.
Okay.
So they've just rolled out smart contracts last year, and part of their they have basically 5 different blocks to their roadmap. I'll kind of go through those real quick with you. But the first one is Byron, which is Foundation, which has already happened. That happened back in 2015. Second was Shelley Decentralization. 3 is Goguen, which is smart contracts, which happened last year in the fall. Currently, we're in the 4th stage, which is called Basho, which is about scaling. And then lastly, Voltaire will be their last stage, which is about governance. So they're not completely done building Cardano, but they're getting close to it. And I think once they do, because they have done this scientifically, it's peer reviewed, they're taking their time, but they're really working to create a blockchain that has all the benefits, to some extent, of Bitcoin and Ethereum mixed together, but not having all the scaling issues that Ethereum has, or the high gas fees, too many transactions happening on single blocks. All this is already kind of built into their infrastructure.
So, do you remember the number of dApps on ETH? Is it like tens of thousands, or is it compared to that 1,000 or so?
I think last time I looked, it's probably gone up by now. They have at least 4 to 5,000. I'm pretty sure.
Gotcha.
It might be way more than that too. But I know, like, right now Cardano has, I believe, somewhere around 1,000. But they do have a lot of total value locked, which essentially is people that are putting their money in predominantly for staking, essentially locking into a Cardano's ecosystem, which helps it grow, helps keep it balanced, and allows for the capital to create new decentralized applications on their network. And that's been growing at a rapid rate recently, as far as new wallets coming into Cardano, total value locked. I don't have the exact stats in front of me, but it's in the last couple of months it's really been growing a whole lot.
And that, I mean, is staking what you call that, and then you're paid back in ADA?
Correct. So essentially, break it down. You have Cardano, which is the blockchain platform itself,
right?
And you have ADA, which is the actual cryptocurrency, which essentially kind of like Ethereum. You have Ethereum as the platform, and Ether is the crypto. It's kind of like the gas. They call it the gas fees.
Yeah.
ADA kind of works similarly, whereas ADA is kind of the gas that keeps Cardano running. And as far as how since they are a proof of stake, whereas currently Ethereum is proof of work, they're moving to proof of stake. How they operate is really pretty cool as far as creating new blocks. And they have what's called Ouroboros, or it's Ouroboros. That's their proof of stake mechanism. So in a nutshell, they break it down. They have blocks, they have epochs, and they have slots. So your epoch has 21,600 blocks within each epoch. Each epoch has 432,000 slots, and each slot lasts approximately 1 second. So every 5 days, a new epoch is created, which has the 21,600 blocks in it. And in order to be somebody that earns like the block rewards, what you have to do is you have to set up a staking pool, and within that staking pool, you essentially have to be large enough to where you can generate at least one block per epoch, and also have enough stake currently in there. So generally, the larger the staking pool, the better chance you have of actually earning new blocks at each epoch. But they have what's called our slot leaders. So it's all random as far as how they determine, which staking pool is gonna earn the next block rewards. But generally speaking, the larger your stake is, the larger your pool is, the greater chance it is that you're going to be elected slot leader and earn those block rewards.
That's intriguing.
Mm-hmm.
So just a moment of clarity on proof of stake. So they're foundationally proof of stake, or is there something somewhere that's proof of work that the proof of stake is built off of, like ETH2 will be?
Yeah, so they're foundationally proof of stake. So essentially, the only way that Cardano grows is people have to put Cardano into staking pools, and then those staking pools, some of them are considered slot leaders. But again, like if you have to have a large enough pool, you need to have a couple of asymmetric pairs of keys, which we'll get into about the security here in a little bit. And then, again, every 5 days a new epoch is created. That epoch has 21,600 blocks. So if you're a large enough pool, good chances are you're going to be earning blocks in most of these, or a lot of these epochs that are created.
Are those blocks smaller in data because there's so many of them? I mean, relative to Bitcoin, say? You know what I'm asking?
Yeah, no, that's a good question. I'm trying to frame that up.
Did you say 21,000 per hour?
No, so 21,600 blocks are in each epoch, and then about every 5 days a new epoch is created.
Okay,
because the slot is about 1 second, and there's 432,000 slots in each epoch. So in a way, it's kind of similar. When Hassan was creating Cardano, he kind of wanted to combine some of the benefits of Bitcoin and Ethereum together.
That makes sense. I understand what you mean by that.
Because we discussed, I think, in the Bitcoin podcast that I think that the difficulty target was changed approximately every 2,160 something blocks, I believe it was, which is about every I think it was like 2 weeks.
Okay.
So they kind of took some of those numbers, I think, from Bitcoin there. But basically, every 20 seconds, approximately, a new block is created. Whereas if you compare that to Bitcoin, it takes about 10 minutes to create a block.
Got it.
So it's a lot faster in terms of new blocks being created. And because it is proof of stake, and typically there is, between proof of work and proof of stake, proof of work is seen to be a little bit more secure. Cardano does have a pretty good security protocol in place that does kind of help it stay secure. And they have these different things called operational keys, and then I think it's conditional keys, I believe. But essentially, if you have, you need to have different sets of keys, a public key and a private key. So if you are the public key essentially exists on the platform itself. It's open, it's transparent, kind of like Bitcoin is an open, transparent ledger.
Mm-hmm.
Whereas the private key, if I was to sign a transaction, I have to do a digital signature on it, and I use my private key. Ideally, I would use something like a cold wallet where I have my keys offline, and you need those keys in order to sign the transaction, and that transaction goes into a public key, which everybody can see.
Okay.
And it's transparent, so there's a transparency there, and you can look on the blockchain, you can see this is what's happening. But
also the security of the privacy.
Exactly.
Requirement.
And kind of going back into the staking part real quick. So they have we talked about it last week with Ethereum 2.0 and what's called slashing. So essentially, if you get a staking pool that's just too big on Ethereum and just not acting in the best interest of the network, they have a protocol called slashing, which essentially will take away a part of your rewards if you're acting maliciously and not doing what's in the best interest of the network. So they have something kind of similar that's built into Cardano, and it's called the K parameter and saturation. So generally, if you think of it, if you have a larger pool within Cardano, chances are you have a greater chance of winning the block rewards just because you're a bigger pool. Probability is higher since it's randomly selected. However, if that pool gets too big, it kind of goes against the idea of decentralization. Whereas if you have, say just a couple 5-10 pools that are too big, and they really get all the block rewards, it's not really in the best interest of Cardano's that's consolidating power into too few pools. So what they do is they have what's called a saturation point. So at some point if the staking pool gets too big, they'll reduce the potential benefit in terms of the ADA rewards that they would receive in terms of block rewards. So it basically de-incentivizes them from getting, once they get to a certain point, of growing any larger because their reward becomes diminishing. Whereas, and then you'd have like smaller pools that would eventually, get to that point of being a saturation point, and then it gets to that point, and their rewards will go down a little bit. But essentially, it just makes it to where you don't have a few pools that just dominate the space.
So those pools, I mean, are those individuals, or is it people coming together collectively, or you don't know? Or...
So you could do both. I mean, generally from what I've seen, it's a pool. It's a bunch of people pulling together capital. So I don't know, it could be like 15, 20 different people, for example, that have pulled ADA together in this one staking pool. And then if you're the like the operator of that node, then you receive certain benefits. Whereas if you're somebody that's like a delegator and you just say you put a 300 Cardano into a certain staking pool, you'll receive certain benefits if that pool gets the block rewards. But if you're the actual operator of the node, you receive additional benefits too, because you're also using the energy, one, for the hardware, and also just to be constantly have your computer running, have the server open. You receive a little bit extra benefits as well. And essentially how they break that down, I have it written down somewhere here. There's like delegator rewards, and then there's a fixed fee amount that a pool will get, which I believe it's 340 ADA coins is like a minimum that you would get if you're operating a node. If you actually earn the block rewards. But what they'll do is they'll take that 340 ADA, and they can adjust that based on if they have a larger pool and say they want to get a little bit more, they can ask for more. But they have what's called a margin. So say you had 10,000 block rewards of ADA for this one particular staking pool, right? You would subtract the minimum amount that they get, which is just automatic, say 340, and say they would have a certain margin rate, anywhere between usually between 2 to 5%. So if you have say 10,000 coins and you get 2% of those coins, that percentage right there goes to the people that are delegators, which basically mean me or you, we contribute to a staking pool. Based on how much we contribute to it, we receive a small benefit percentage-wise of the total number of ADA coins.
From that, yeah.
So if you have a larger pool, you're obviously going to earn more ADA coins, and you can probably increase that percentage there that you're going to get as a margin rate. But the issue becomes which is why they have the saturation point, that pool
right.
gets too big.
Right.
Then what prevents like a pool from just getting like way too big, earning all the rewards, and just leading to more centralization? That's why they have the saturation point. At some point, there's a diminishing return. You'll receive a smaller percentage of ADA coins once you get to a certain point.
So, are there like rich people who have big, gigantic staking pools and who are just making bank on this thing? You know what I'm saying? Or is it mostly like individuals with the one, what was the word, block operator, or whatever, who's getting
like
the most operator. Of it? Yeah.
Mm-hmm.
You know what I'm asking? Like,
yeah.
Are there people making like millions of dollars in these staking pools because they're so big and they have so much invested in it? Or is it actually decentralized? I mean, I hear what you're saying about the saturation, and it becomes silly to do it. But obviously, people will give away a lot to have more power.
True.
In a space.
No, I don't have any exact statistics in front of me there. But yeah, I imagine there are people that are operating these nodes that just have a ton of ADA put in, especially if they bought it like when it was like say 2-3 cents.
Right.
Say they just have thousands of ADA. Potentially, you'd be doing pretty well, because if you get these, you got a big enough pool, and you're getting all these block rewards on a pretty consistent basis. It's just gonna keep on adding and adding, and then your pool gets bigger and bigger and bigger. I guess until you get to the saturation point. And that point it's not really beneficial for you to grow that pool size anymore. So what you may do at that point is perhaps keep that pool and go create another pool.
Right.
Eventually the idea is you have a nice mix between pools that are big enough to really help, secure the network, run the network, and also enough small pools to where you don't have everybody in one big pool and everything is just centralized. It keeps it being more decentralized in nature.
Yeah, for the record, we're doing this podcast earlier than usual, so if you're watching me on the YouTube video, I'm yawning like a ton. We usually do these things at lunchtime, and we're coming in hot here at 9:30, 10 a.m., so I'm still waking up apparently. But I mean, this is intriguing. So like on a long, if what's the story on ADA coins and their circulating supply? Like, is there a limit? I mean, or is it kind of like there's not, but it's more like Ethereum already, more like ETH2 is gonna be, sort of? Is there any deflationary aspect or any?
So long term, Cardano does aim to be deflationary. As far as right now, there's around 33 billion ADA coins. So as of right now, I wouldn't necessarily say deflationary now, but as it becomes more used, especially as it develops over the next 5-10 years, and you have more development, more decentralized applications, essentially more ADA being used within the network, it does aim to be deflationary just to an extent. And also, like, one cool thing about ADA is that it's very scalable. So they have what's called Hydra, which essentially is, we talked about sharding with Ethereum, right? So essentially sharding was, when ETH goes to ETH 2.0, they're going to break down Ethereum into 64 smaller chains.
Right.
So Cardano kind of has their own system of doing that to an extent as well. So once you have a lot of transactions happening, say on certain parts of the blockchain, they can scale. They can basically, kind of like a Hydra and all its little heads. They can keep making, smaller chains off of those, smaller chains off of those.
Without having it to be as stressful as ETH2
exactly.
is.
So you don't have as much like network congestion and basically the network being clogged up with transactions and fees being too high.
No, that makes sense. I mean, they're ready to grow more and more.
Exactly.
I understand.
And one cool thing too,
it makes sense to me then that they're in the top 5, because anybody who knows that that's already set up to be that way. Yeah.
And the fact that they're in the top 5 and they really don't have that much development yet, I think speaks a lot too. Because the next 5-10 years, let's just say if Cardano takes 5%, 10% of the market cap away from Ethereum, Cardano's going to grow, like, as far as price point, it's going to grow a ton in my opinion. Yeah, not financial advice, but I could definitely see a $10, $20 ADA in the future, next 10, 20 years. Not to mention what they're doing in Africa too, which is pretty. I don't know if you heard about this in like Ethiopia, certain African countries. They're essentially implementing their software. They basically aim to be the technological infrastructure, blockchain wise, of Africa in the next like 5-10 years.
All right.
Not just Africa, but like developing countries in general.
Yeah. That's a pretty big market to aim at in a good way, because I know that it's interesting to me in my travels, at least, that, I mean, in Africa, they've been texting each other money for many more years than we have here. We have this sort of fear about, like, what do you mean text me money? Like, no. And now with Venmo and with, what's the other one? Zelle
PayPal.
And PayPal also, but what's the other one? Cash App. Mm-hmm. And it doesn't feel quite like texting, but it's the same. You're sending money to a cell phone number,
Right.
But in Africa, that's how they've been doing it for a hot minute, because they keep their money on their phone pretty much. If you don't have a bank or access to a ton of capital, like, and I think it's brilliant, is what I really mean, because you're aiming at close to 1 billion people on the continent of Africa, and maybe it is over 1 billion now. I don't know. But
they're like one of the only continents that has a increasing birth rate too. And generally speaking, if you're looking at it on a historical basis, countries or areas that have an increasing birth rate eventually become economic powerhouses. I could definitely see Africa in the next, 10, 15 years, especially with the declining birth rates in the U.S. and the West and even China now. I could see them definitely taking on a bigger role in the global economy. And if Cardano's going to be there building the infrastructure, that's just like huge.
Between now and then, no, that makes perfect sense what you're saying, and it's not. It ain't roads they're building; it's technological infrastructure, and all of the cellular data transfer, etc., is already there for sure. Because there's smartphones on every corner, just like here. I might have told you this story of a guy I know here who runs a nonprofit called Global Bike, and they give bicycles to people around and really help. I think mostly women start businesses and things and give them transportation or whatever. And he was over there sitting around a campfire with a Maasai warrior, like the guys who wear the thing on their neck, like a full out, like has a spear for real and stuff.
Right.
And this guy like pulls out his smartphone, and like connects to a satellite and is on Facebook next to this dude. And I'm just like, what is life right now? Like, the world is already covered with the tech. And if someone's bothering to aim the financial, especially in my opinion, the financial piece of that at developing countries, the growth that can happen there is going to be insane. And I've seen it in person in Rwanda. I mean, some Western money has flowed there, and it's one of the safest, coolest, most quickly growing places in the whole, at least in Central East Africa, if not the whole continent.
Plus, you got the CAR who just made Bitcoin legal tender, second country. And
That's
you got El Salvador #1, and now Central African Republic just did it about a week ago.
Interesting. I did not know
Which
that.
they only have 5 million people, and like hardly anybody has internet there. But it's still something. It's one more country down. It's going to happen.
Well, it's governments recognizing the power that's shifting, but also the power that's at hand for them if they'll just do something. So that's Bitcoin for Central African Republic.
Yep.
That's intriguing.
Making a legal tender, which and for them, it's why wouldn't they? If you have a currency that ain't worth anything, if it's advantageous, I think right now, if you're a smaller country, to adopt Bitcoin as legal tender and be ahead in the ball game instead of waiting until 10, 20 other countries do it.
I would think too that it would draw development, the very kind of development we're talking about through Cardano. It would just be like, crypto friendly, let's roll.
Plus, you got Panama talking about doing it now too. They're not that far away probably.
It's happening fast. On Preston does news for Team Crypto at least twice a week, and on his May the 5th one, which was this past Thursday, he's cutting a new one today too. It's Tuesday, May the 10th, by the way. He was talking about all the Argentina banks, some more American banks kind of starting to talk Turkey. It's happening in the financial sector. It's happening big and fast, and this sort of dip in the market, I think that you and I both believe is like we're pushing out weak hands so that big money can come in the next, I think, 90 days or something. I don't know what you think, but
and we're only like less than 500 days away from the next halving cycle. So like, way to look at it, if say you're in the market right now and you're down on your portfolio, like worst case scenario, we have about 500 days to the next halving cycle, and we know it's going to go up, at some point in 2024. But this is the best opportunity to be investing. I wish, anybody coming in the market now, like, this is the time to be putting your money in dollar cost averaging, because you're going to be looking real nice when this thing hits 100, 200,000, which worst case scenario, probably 2-3 years.
Right. Bitcoin today is, 32,000? And it will likely dip below 30, we think, in the next, I think, couple of days, honestly. And then ETH at maybe 23, 24 this morning, but it's going south of 2,000 easy. So it's kind of like, put in not financial advice,
right.
Blah blah blah. But like, if I have cash on hand in the next week or so, I will be buying Bitcoin really for the first time in a significant way. I haven't messed with it, but also ETH. I want as much ETH as I can have, man. I'm a coin collector for ETH. I want ETH more than dollars. I just do. Bullish on ETH, especially since our last podcast. But now bullish on Cardano because, like, dude, I would like to bet on Africa.
Oh, yeah.
I would. Africa, India, China, these are safe bets in the world right now. I'm still betting on America, too, but it's like...
I'm still buying Alibaba.
I love it, dude.
Yeah,
I love it. I don't know where Jack Ma went, but... Oh, man. So what's next here?
Yeah, for sure. So kind of getting back to what the saturation point and the pools and everything. Key point, so ideally pools that are getting like big enough to be at saturation point.
So
They can earn about 100
pause.
blocks per epoch.
Sorry. Is
ahead.
there a minimum amount pooled? I mean, there obviously is a minimum
Mhm.
amount pooled for a liquidity or staking pool or whatever. How much is that? Is it a boatload of money or?
I couldn't find anything that said like there's got to be like a minimum amount.
Okay.
But what I did find that I thought was interesting is talk about these margins that you can take. Essentially, you have the amount in the pool. They have their amount that they get for the reward. You got a certain amount that's fixed, and then you have like they can basically decide generally how big they are. If I want to take like a 4 or 5% margin, or say a 2-3% margin. So if it's a larger pool, they generally take a slightly higher percentage. Smaller pool, a little bit less percentage. Because generally, if it's a larger pool, you're getting most of your money from the block rewards. Whereas if you're a smaller pool, it might be to where you get most of your rewards just from the fixed amount that you get. So and generally, the more that you got in there, the more you're going to earn block rewards. Now you can take more higher percentage, and you get most of your rewards from that. Whereas smaller pools, a lot of it may just be the actual fixed amount that you get is the majority of what you get. So there's an incentive definitely to grow to be a certain size, but then of course the K parameter and the saturation point determine, all right, at this point you get diminishing returns, and then everything they kind of maybe split off and starts in smaller pools, and it kind of happens all over again. But kind of wanted to get into also the keys as well. So that's kind of one key big part of like the security of Cardano. Since it is proof of stake, they have to take security very seriously. And we discussed earlier the private key and the public key, but also too. So if you're operating a node, there's basically three main like keys that you have to have. There's what's called an operational cold key pair, a key evolving signature or KES, and then a verifiable random function key pair. And I'll just kind of go real briefly into those. So the operational cold key pair basically grants the right to like sign blocks to the KES key pair, and the KES key pair is used for signing a new key pair. So essentially it'll expire periodically, and then a new one is created. And then the verifiable random function key pair is used to find out whether a node is a slot leader and actually can earn the block rewards. And then the other cool thing, they have what's called operational certificates. So like basically the keys, the reason they have them is to like create what's called an operational certificate, which essentially just validates work done like on the blockchain. So basically also checks whether like a node is a slot leader and they can earn rewards, but also are they able to sign the blocks, so they're doing everything legit. And then the certificates that are like stored on the blockchain, they contain public information such as like addresses, keys, operator signature. So essentially everything that you see on like the Bitcoin ledger, you can see these certificates provide all that information and basically post it up, in public keys like on the Cardano blockchain.
Transparency.
Exactly, there's transparency, but you also have the private keys, which are generally, ideally, you would use, like a ledger or some kind of hardware wallet, and you store your private keys offline.
And that's for the node operators proper, not to like necessarily just access your own coins or whatever.
Right, that's more for like the operation, if you actually operate the node.
Yeah.
So essentially, if it was like, yeah.
No, really, like if my eyes are glazing over on the YouTube because like you just went into territory that I'm lost on it, dude. Seriously, because it's like my question practically is if I want to run a Cardano node, say, what do I do? I buy a bunch of ADA, right?
You need to have a lot of ADA.
And then go to their website and pool it, stake it, whatever. And then, like, what I don't understand, and maybe you don't either.
You'd also have to run a node, too. So you'd have to have, kind of like with Ethereum, or even like Bitcoin, you'd have to essentially have software pretty much running constantly on your... so basically what that does, that node basically verifies transactions on the blockchain so that, for example, when a new epoch happens, new blocks are assigned, you're verifying that that you have the right to earn new blocks, but also that everybody else has the rights. They're slot leaders. Essentially, the nodes help verify all the transactions on the network and the security of the network. And you have to, if you're going to actually run a node, you have to have this software running pretty much all the time.
Got it.
And you have to have a certain amount of ADA staked, which I couldn't find. Like, is there a minimum amount? But I assume you have to have a pretty substantial amount. If you're not looking to do that, than simply if you just want to put 300, 500, whatever it is, into a staking pool. That's probably your better option, because that way you don't have to worry about operating the hardware, the software. And from what I can find, there's not one cool thing about Cardano staking is you don't necessarily have to have it in there for a set amount of time. Some staking pools may make that a thing, but it's not like a thing all across the board with Cardano. My understanding, you can pretty much like put it in and take it out when you want to as well.
Okay.
Which I thought was pretty cool.
That is, not having to lock it up.
Mm-hmm. And you basically would receive like a certain percentage. So generally, what I found, there's a website. So if you have like a hard wallet, for example, I have like a ledger, and you want to stake your Cardano through a staking pool with your hard wallet, there's a couple websites you can go to. One of them is called Ada Lite, which is one that I use. And you can, if you want to, like, first of all, you take your Cardano from whatever exchange, you put it all into Ada Lite through your hardware wallet, and then you can join staking pools like through that website. And they have what's called like delegator fees. So if you want to earn, say, like a 3% interest on Cardano, you have to put a certain amount of Cardano into the staking pool, but also there's a small fee that you got to pay in order to join that staking pool as well, which I think that helps cover the operator's costs and everything.
Right.
So you receive a certain percentage based on what they say there, but from my understanding, with the block rewards as well, you have potential to potentially earn some share of this block rewards as well by joining that staking pool. So you might actually get a little bit extra too, in addition to say the 3-4%, if that staking pool actually does earn some block rewards, which if it's big enough, then good chance you probably will get a little bit of that as well.
Yeah, that's... is there any indication, like, or is it just public? I mean, I'm sure it's transparently reported somewhere, but like how many nodes are running at any given moment on Cardano? Or, you know what I'm saying?
Yeah, I was looking at that the other day. I can't remember the exact number.
And how does that compare to what, I mean, how do they even report that? Is that reported as value locked, or is it reported as, you know what I'm saying?
They have what's called the TVL, like total value locked. So I think I saw a statistic, I believe it's like 70% of Cardano is currently in TVL, which means total value locked, which essentially is basically being staked.
Okay.
So you have to have, because it's not proof of work, it's proof of stake, you have to have a pretty significant amount of Cardano being staked in order to keep the network running. And right now, most of Cardano is staked, and that number is just growing and growing and growing. Plus, you have, I think, just in the last few months, a bunch of dApps coming on board the Cardano ecosystem. So the combination of the TVL increasing plus dApps coming on there, and really they're just right now in that basho stage of scaling and really implementing all that technology. I mean, they're pretty close to being done right now.
I was about to say, how long until Voltaire is next?
It's the next one about governance.
And how long until do we know?
We don't know. I mean, right now
all the way out.
It's kind of like E2.0. They can say this and that, but these things tend to drag out. My guess is we're probably another year or two away from Cardano being completely finished to some extent. But I do think once they really get to that point, because they've already built in like scaling solutions, they've already got pretty good security. They're pretty decentralized because we have like the saturation point and all that stuff we talked about earlier. I do think there's a lot of potential with Cardano.
So, do you remember the year? When did Ethereum start with Hoskins compared to?
So Cardano was founded in 2015.
Yeah.
So I believe Ethereum was founded around the same time. Actually, I think it was around 2013, 2015.
Got you. But I mean, he fixed some of the issues with. Is really what we're saying.
Yeah.
Has he done anything since then? Since Cardano's?
Yeah. He's pretty much focused on that.
Okay.
So what happened? Basically him and Buterin got in. Buterin's the guy behind Ethereum, by the way, Vitalik. They got in a disagreement. They split up in 2015. So he went and found Hoskinson, the Cardano Foundation, and a company called IOHK, which is like a blockchain engineering firm. Essentially, they do all the work with Cardano and the technology, and the Cardano Foundation is based out of Switzerland. But essentially, that's 2015. Cardano was founded, and then really 2017, they did basically 2 years of like research and just developing the technology. 2017 is when like Cardano was officially like launched, I guess you would say. But they're still in development currently. It's not like everything has been created yet.
Right.
With Cardano. But the fact that they have a game plan, they have a the roadmap and everything, I think is pretty important. Whereas it's kind of seems like a lot of the other blockchains are kind of just like winging it. We're just trying to like constantly update things on the go. They have everything laid out. Like I said earlier, you can go online. They are peer reviewed, which is pretty important. They're the only blockchain that I know of that's peer reviewed. So
So do
do
you
everything right, I think.
personally deal with any D apps on Cardano or any tokens that are built off of it, or you know what I'm saying? Like, is it
Yeah, I haven't yet, but I have watched. So they have, as far as decentralized exchanges, they have one called Sunday Swap.
okay?
Now, so when they launched, I think it was like last year, they've had a few issues, mainly because they haven't really built out the ecosystem yet. And when they first launched, like Sunday Swap, there were just too many people trying to do transactions at once. It was very slow. It could take a really long time to happen. I did notice that a little bit whenever I transferred my Cardano from my Coinbase account to my hard wallet. It took like hours for this transaction to happen.
Huh?
So right now there's some issues. Like it is pretty slow at the moment with Cardano, but I do think those things will improve because this just happened. As far as the smart contracts, a few months like last year.
Got you.
So whereas Ethereum has been doing this for several years, I think over time they're definitely going to get a lot faster. There are some issues right now with the speed in which these transactions occur, and sometimes they don't even go through as well. So I do think they'll eventually get those things fixed, though. We're in the very early stages of Cardano, in my opinion.
Yeah, that's interesting though.
And they have NFTs and stuff like that too. But again, all that stuff is very new compared to Ethereum or even some of the other like Solana or these other chains as well.
So, full disclosure, do you own any ADA?
I do. It's not my biggest holding, but I do. I would say it's definitely besides Bitcoin, Ethereum, it's probably my top 5 holdings as far as like your major L1s, that and like Polkadot and Cosmos. Been getting Avalanche recently.
Yeah, it's
So we'll
dirt
do another
cheap
one on Avalanche.
today. Yeah.
Everything's dirt cheap right now. I think long term under $1 ADA. Like if you're looking at this on a 10-year time span, that's nothing.
What's it at today?
It's around like 70, 80 cents. I think.
Okay. And what's the market cap?
Right now, the total the market cap from it. The supply is like 33 billion. I think I want to say it's like 3rd or 4th, I believe, on the total. If you go to like coinmarketcap.com.
Yeah.
So it's top 5. I'm pretty sure right now. Which is pretty incredible considering that they have so few applications currently up and running.
Yeah, I'm gonna look it up right quick. Yeah, you're right. It's gigantic, relatively.
Let's see its number, go down. Top 10.
Number 8.
Number 8.
68 cents today. This is May
Yeah.
the 10th. 23 billion market cap.
It's ahead of Binance.
And almost 3 billion volume in the last 24 hours.
And the volume's been going up a lot in the amount of people that are staking.
That's the Binance stablecoin. BNB's up here.
Okay, I'm going to say.
So yeah, I mean this is as of today, but Bitcoin, ETH, Tether, BNB, USDC, XRP, Solana, Cardano. That's how they're going. Very interesting. Yeah,
That's pretty much all I got for today as far as
Bitcoin and ETH down 15, 17%. BNB down 16, XRP down 15, Solana down 18, Cardano down 13. It's been
it's a red day.
It's been a scary week.
I guess do you want to before we get going, do you want to discuss like maybe some strategies now, like if you're as far as investing, if you're a new person in the market?
Yeah, like in 2 minutes or less. You know, it's a bloodbath out here. Everything's in red. I'm new to crypto. What do I do?
Right. So I'd say scenario A. Let's say you've already invested, and say you're down 50%. And let's just say you have a whole bunch of altcoins right now that are just bleeding. What do you do? Like, do you sell them all, put in Bitcoin? That's really up to you. What I would recommend, if you're invested in solid altcoins, especially the L1s, the Cardanos, Solanas, stuff like that, I would probably just dollar cost average down on those. For me personally, what I do every Friday or every other Friday, I set up a DCA. I found Fridays are the best days to invest. Typically, the prices are the lowest. A couple reasons for that. One, typically there are a lot of options that expire, and we all know that leverage trading has a big effect on the market in terms of going up and down. But if you put a small amount in on Fridays or every other Friday, I would put majority of that into Bitcoin, maybe a small amount into Ethereum. If you want a dollar cost average down your alts, that's fine, but I would probably stick with your large to mid cap alts at this point. As far as your small cap alts, if Bitcoin does go down and hits the 200-week moving average, which is around $24,000, you're going to see those bleed even more. So you probably have a better buying opportunity if you were to wait on some of those altcoins. But right now, honestly, if you just put it in Bitcoin and Ethereum, that might be the smartest move right now. And also keep cash on the sidelines too, because if things do go down, and you can be earning interest on your stable coins. Like if we hit the 20 to 30,000 range, which I think we probably will. I'm going to continue to DCA, but I'm going to DCA like a little bit more. Like instead of, for example, putting in $100 on Fridays, I might put in like $200 on Fridays or $150 on Fridays, and just take advantage of the dips there.
Well, and to be clear, when you say cash, what you really mean is what? Not actual U.S. dollar bills, but USDC.
You can do that, or you can just, like on an exchange, like a Voyager or Coinbase or whatever. You can just take cash out of your bank account and transfer that over, and then use that cash, like actual U.S. dollars, to buy as well. Or if you have USDC on the sidelines, from profits you've taken, then you can also use that too.
That's kind of what I mean. Is that like if you're still very green to this, like I still am.
Mm-hmm.
A lot of times we talk about stable coins and U.S. dollars interchangeably almost because their value is in the crypto market interchangeable.
Mm-hmm.
But when I hear the word cash, I still think about actual physical dollars. Now, at the Team Crypto store in downtown Spartanburg, we have a Bitcoin ATM now by CoinGenie, coingenie.tech if you want to check that out. You can feed this sucker dollar bills and it gives you Bitcoin. And you can feed it Bitcoin and it gives you dollar bills, which as far as I know is the only one around here that does that. So we're glad to have that in, and come check it out. It's kind of cool and crazy and awesome. That without a computer, you can turn cash money, physical currency, into digital currency, and then you can go spend it in the Central African Republic.
Mm-hmm. Or El Salvador.
Right? That's wild.
Soon to be
It
Panama.
really is. I mean, it's just like the one world currency is upon us, I think, for better or for worse. And
You mean a Ripple?
Yeah. Yeah, that just might be the U.S. dollar here in a minute. We'll see. But yeah, thanks, Barnes. This is a lot, as it is every time. I'm in over my head on all those keys and everything that you're talking about. But it sounds like if you're sitting on a pot of ADA, running a node, if you have the software capacity, or staking it into a pool, has rewards that just might very well be worth it for the foreseeable future.
Especially if the price goes up.
Right, because I mean, they're at 23 billion, teetering with Solana there, and XRP right now. So to break into the top 5, I mean, I guess USDC is
and they
way
were in the
up.
top 5 for a while, so
Yeah,
definitely happen again.
well, thanks, man. We'll see you next time, and on YouTube. What's up? Peace.
Peace,
and
guys.
Talk to you soon. Thanks.
Totally forgot to mention the scaling part. That's all right. We had a lot of stuff to talk about.
All right.
It's kind of hard to keep track when you have like 6 pages of notes.
No doubt, dude. No, you're doing so much research. It's wild. Because literally, I'm sitting there like, I don't know what you're talking about anymore.
Yeah, some of the key stuff I don't even hardly understand. But
because it does make sense to me that like there's a private way to do things that they then make public in a way that doesn't reveal your privacy.
Exactly. I thought that was really cool.
Makes sense. Yeah.
You have to have that private key and public key. That's kind of like to some extent like I was like, let's watch a lot of Cardano videos, but this one guy was talking about essentially they're trying to combine the best elements of Bitcoin and Ethereum. I haven't totally mentioned. I mentioned too. They have like two different layers too. They have like the settlement layer, which is like the basically the layer one, which has all the transactions, and then they have the computation layer, which is the layer two, which essentially that's what actually does all the work.